Bitcoin waiting, Radix upgrading, and the FOMC pausing. That is the theme of today's show. Welcome to Sin City Crypto. My name is David. I'll be one of your co-hosts today. And today, like every single weekday, we're coming at you live from our beautiful studio in the heart of Las Vegas, Nevada. If this is your first time checking us out, we are an entertainment-focused cryptocurrency channel. We take old, boring, and stale information, and we make it fun and engaging and exciting for you. We are still sans Rob. He's dealing with some health issues right now, so we hope he gets better. We miss him. He'll be back soon, but we have picked up the phone, called my buddy. My boy Forrest is joining us. Forrest, how you doing?
Hey, good. Thanks for having me on. Happy to fill in. Hope Rob's doing better.
Yeah. He's we'll get you an update here soon. But he's getting his health stuff taken care of, and so again, we miss him, but we love having you on for us. Thank you so much. How have you been, man? Let's just pause FOMC. The Fed, the CME said 99% pause. That is exactly what we got. We'll get into the markets here in a second. Are you surprised? Do you think this is gonna be? We're gonna stay at this level for the foreseeable future? Obviously, Jerome Powell will be speaking in about 20 minutes. But what are your thoughts on the pause, and how do you think it's going to trickle down to the crypto markets?
Yeah, so apparently now they are baking in. They foresee the terminal rate or the ultimate rate that they reach by around 2024, 2025 to actually be 50 basis points higher than what it is right now. So for the rest of the year, the panels come out and said, I think one more rate hike. We're gonna see. I mean, that treasury rates are getting high. They're at 5%. The yield curve is still inverted. The higher they push these rates, the more money the U.S. owes on its debt. They say higher for longer, and they say they don't foresee any rate cuts until I believe September of next year. That's a long time. They keep saying higher for longer, but we'll see if they can keep them that elevated without anything breaking. I mean, we saw in COVID when stuff started breaking, they dropped those rates real quick. We've seen in the past when stuff starts breaking, they drop the rates. So we're going to see how long this economy can hold out.
Yeah. And guys, Ultima Maya's $2 super chat. Rob getting the Bitboy treatment? No. We love Rob. He's just dealing with some personal stuff right now. So we're holding the fort down. So don't worry. Rob will be back soon. I know he's your favorite. Just kidding. I'm your favorite. Before we go any further, guys, do want to thank our sponsors. First and foremost, CAM's Blue Wire Technology. They are our network partner. So what they do is they help businesses secure their networking, IT, and cybersecurity. And we know how important that is with what happened over here in Las Vegas. So if you run a business and you want to maximize those and make sure those are your T's are crossed and your I's are dotted, visit bluewiretech.com. Also, big shout out to Radix for sponsoring the channel as well. The top layer one DeFi in our space. And again, today our special guest is their CEO, Pierce Ridyard. We'll be discussing the big Babylon upgrade. And we are introducing a brand new segment today called Rate My Portfolio. We added this on Twitter. And Rocco, if you want to pull this up here. So we'll be rating this, Forrest and I. We'll be rating this portfolio submitted by one of our members. We'll give our opinions, what we would change. We'll give it a rating. And so this is a new segment we're doing every week. And we will give you guys more information tomorrow on how you can submit your portfolio to be rated by us live on the show. So this is something we're super excited about. Also, what I'm not excited about is gas prices being high. And so I don't have a lot of funny stuff today, guys. It's been a hectic morning, but I do have this. Regular or premium? I'm just looking. Thanks. Now, Forrest, you have come on the show and you've stated multiple times that you're looking to hedge. And one of the things you're looking to hedge with was oil futures. Is that still your plan? How is that working out? Are you making any adjustments? Does your strategy change now that oil barrel is over $95 again? Where are we at?
Yeah, so ultimately the reason for hedging with oil is that's like the kryptonite to this economy. That's you look at the current administration, and I won't get super political, but it's obviously not not super supportive of fossil fuels or oil, and that oftentimes leads to higher oil prices. Higher oil prices are not good when you're trying to fight inflation. The two do not mix well. They're like oil and water, so to speak, no pun intended. But as oil prices go up, you're going to see that start to push inflation back up. Now, right now, we've seen a 34% increase in under the last in under 90 days. In the last 90 days, it's been about a 34% increase in oil. If that pace continues, we're in trouble. If that pace continues, if we level out here, or we even start falling, back downwards, and we get back below, $85 a barrel, then I think we'll be fine. But the reason for hedging with oil and having some oil futures in your portfolio is simply because if oil goes up and it stays up and it stays elevated, that can wreak havoc on the rest of the economy and the rest of your investment portfolio, right? So, obviously you'd want, more expensive oil to offset some of the losses elsewhere in your portfolio. I don't necessarily think that we are going to see oil continue its streak, but if it does, it is very much cause for concern. But yeah, I personally have been predominantly hedged just in dollars, just in the US dollar. Obviously oil would have worked out a little bit better. Had some oil in the portfolio a little while back, ended up just going with dollars to stay safe. But yeah, oil prices up is usually going to be a leading indicator of inflation moving back up.
Awesome. Guys, let's just jump right into the markets. And today's market segment is brought to you by our other channel sponsor, iTrust Capital. If you want to set up a self-directed Roth IRA account and enjoy some of your gains tax-free in retirement, you're going to want to open up an iTrust account. If you use the link in the description of our video, you will receive a free $100 once you fund your account. We're going to start right here. Obviously, the big news of the day, Fed signals it will raise one more time this year before it ends the hiking campaign. Now, Forrest, how are the traditional markets reacting? I don't care if you want to look at the Dow Jones, the Nasdaq, the S&P 500, but what is traditional? What is TradFi doing? Is this bullish news for them? Is this bearish news? What are the charts saying on the macro and traditional finance?
Yeah, sure. I can pull up a chart real quick. It's nothing too crazy. So the S&P 500 in the last, we'll go to like the 5-minute chart. You can see when that decision came out to pause, but they also said one more rate hike, higher for longer. S&P 500 moved down 0.33%. So obviously, more rate hikes in the future for this year, and not a strong stance on, hey, we're going to pause and we're going to stay paused, and we may even cut in the future. That's obviously, it's going to be a little bit bearish, right? But for the most part, this was very, very heavily expected that there was going to be a pause. It was baked in, or was priced in with about 99% certainty. There was only a 1% chance that they actually hiked rates here, which would have been more bearish. Really, I believe Jerome Powell comes on to speak in about 10 minutes. Yeah. So what the market does next is going to be heavily dependent on what Jerome Powell says, right? If he comes out super, super hawkish and he thinks, inflation ticking back up and is going to stay back up, then obviously that's going to be bad for the S&P 500. But if he's has a bit of a more dovish outlook and he's more open to cutting rates in the future, and he kind of talks it down a little bit, then that could be a little bit more bullish. Right now, we just got a nice, I wouldn't even say a strong reaction. I mean, 0.3%. It's definitely not. It's definitely not great. It's definitely not a positive day, but we're not free falling here. So it really just depends on how Jerome Powell positions and how he talks in the next, the next half hour or so.
Yeah. And as Forrest mentioned, guys, Jerome Powell will be speaking in about 10 minutes. We won't be covering that live, but we will give our thoughts on it tomorrow. And obviously some headlines might be published. But I do want to get into a real quick shout out to RustyBot. I believe that's Danish money. I could be wrong. Either way, it's money, and we appreciate it. He said, not comment Jim emoji. When is Jimmy's emoji coming soon? I believe I spoke to Rob about this a few weeks ago. We need more members to unlock a new emoji. And so that's all we're waiting on. But Jimmy is the next emoji that we're giving. for obvious reasons. Big supporter of the channel, always gifting out memberships. We love Jimmy. And so, guys, also, if you're new here, make sure to say hello. And so let's just jump right into the markets. What is crypto and Bitcoin doing? Well, it's flat. Bitcoin flat on the 24-hour, slightly down on the 1 hour, sitting right above that 27.1 level, 27.181. ETH coming in at $1,632. Everything is pretty much flat. XRP is seeing a little bit of a pump, 1% over the last 24 hours, up to almost 50. Well, yep, there you go, 52 cents. Cardano, which has not been moving at all, is at 25 cents. Doge, 6 cents. Telegram coin, Toncoin, up 30% on the 7-day, sitting at $2.45. And rounding out the top 10 is Solana. We saw a lot of FUD with Solana and the FTX bankruptcy. And, a lot of it was warranted. People didn't know the context, didn't know the information. They see headlines. FTX to dump 1.1 billion of Solana. Obviously, we talked about this last week. The open interest on Solana is only $400 million. And so, of course, that would have a massive negative impact. But we did clarify things on the stream. It's not first of all, not all the tokens are available to trade. A lot of them are locked up till 2025. B, there's parameters to how much of the crypto they can liquidate over a 1-week span, which I believe the number was 50 million, potentially up to 100 million. There was a $200 million number thrown out there, but they would have to get approval from the judge. And what you guys got to understand this, as well, is it's the fiduciary responsibility of the bankruptcy counsel, John J. Ray and Company, to maximize the gains and the profits and the money that they get from selling these cryptos. So they understand if they start dumping everything at once, the back end half of the crypto that they're trying to unload into US dollars is going to take a massive hit. And so we have a few things working for us, but let me ask you this, Forrest. Do you think this is kind of the last negative dampening price action that we're going to see with this FTX dump, barring anything new coming to light, like, I don't know, something with Binance or whatever the case may be? You think this is like the last little hump we got to get over before halving comes around, spot ETF comes around, and so forth?
Unfortunately, no. I actually think that, it is
Wait,
probably the last thing before the spot ETF. I believe October 16th is the day we want to be looking out for that. October 7th might be another interesting date. So I do like my base case is, barring some sort of, crazy, traditional legacy market, craziness happening. I do think that we start to recover a little bit. And I think we'll see speculation into this Bitcoin spot ETF decision. I think that'll drive Bitcoin's price up. I think it'll drive up the prices of some altcoins too. Excuse me. But ultimately, once we get through that Bitcoin spot ETF decision, there's really not a lot of bullish things. It's a lot of bearish things. It's the Mt. Gox distribution. It's the US government selling 30,000 Bitcoin supposedly by the end of the year. It's bearish, right? So if we get a delay with that spot ETF decision, or a delay or a disapproval, I don't think we'll get a denial, right? But if we get a delay, that really just pushes the Bitcoin spot ETF decision back, and it sets the precedent that the SEC is in no rush to approve this thing. So they likely delay until 2024. Well, then, by the time 2024 rolls around, we've had these other bearish catalysts, right? So I do think that the market takes a turn for the worse if we get a delay on that Bitcoin spot ETF. Now, if we get an approval, I'm very bullish. I do think you'll see a really, really strong Bitcoin inflows, but that still doesn't negate the fact that we do have some supply side overhead coming down the line with Mt. Gox and the government distributions. So, it's going to be a mixed bag. Everything boils down to the ETF decision on the October 16th, in my opinion.
Can't someone argue, though, for us that, we had Mark Yusko on the show yesterday. He thinks the number is between 30 and 300 billion that's going to flow into Bitcoin via spot ETF. And, the way he got to those numbers is how much are these asset managers managing, the ones that all applied for a spot ETF, and what percentage of that will get moved into an ETF via their clients' portfolios. And his range was between 30 and 300 billion. That could potentially offset the negative you just spoke about as far as Mt. Gox and the U.S. government, But let's say that is not an issue and we get approval on October 17th, and we do actually have a contest going on our Twitter. It's our pinned tweet on our page. If you want to submit, we're doing a $100 Bitcoin giveaway. The day the spot ETF gets approved, Forrest, let's say it's Monday, October 16th, and spot ETF gets approved in the morning. What is that candle closing at that same day? What is your price prediction for the day of? Obviously, the inflows are not going to come day of, but just from speculation, from it and making headline news, from people jumping the gun, what is your prediction on where Bitcoin is closing candle the day it gets approved? Spot ETF.
Obviously it depends on where we start the day, right? But assuming we get speculation and we see Bitcoin pushed up between 29 and 30K by then, depends on if things leak. Things oftentimes leak, but that day I could see us closing above 32K, right? We close above 32K. That's a really, really big level to close above. I've seen some analysis on some of the inflows that it would bring, and that analysis, I think it said $42,000 Bitcoin within the first 100 days after the Bitcoin ETF is approved.
Yeah.
Look, I'm bullish. I don't necessarily think we just zip to 100K as soon as we get a Bitcoin ETF approved. I think it's a long and slow process, and I think you really want to see the Bitcoin halving come around. I think you want to see rate cuts from the Fed to really create a bull market. Look, if we see $42,000 Bitcoin in by the end of the year, that's a very bullish outcome. But you also have a lot of people underwater that are happy to get out of Bitcoin at 42K, happy to sell their Bitcoin at 42K. Now, I'm not saying that I don't think it's going to go higher, but you have to understand miners, right? Miners who have been underwater, 42K Bitcoin, they're going to be dumping, right? Because they view that as a win, and they view that as an ability to extend their lifespan. 42K Bitcoin, if we get this ETF approved by the end of the year, would be probably my official prediction, 42K, but not necessarily much higher than that. Maybe 50K if things get really, really out of hand. But again, it depends on the government. You got to understand, the government has 30,000 Bitcoin to sell, and if they want to sell that by the end of the year, that does, right now, if they were to rip 30,000 Bitcoin into the market at a price of 27K, that's a lot less in dollars that they're extracting from the market compared to if they sell that at 42K. You almost want the government to sell their Bitcoin for cheaper, so they're not dumping a higher amount or a higher dollar amount for you at a higher price. So yeah, a lot to think about there. But again, I'm as bullish as anybody on a Bitcoin ETF approval. Where I really start to worry about the market is if we get a delay, because then it's just we don't have anything very bullish happening for a couple of months.
Yeah, that's a fair point. And I know there's some people that don't like to hear negative news or negative outlooks, and just crap on people for being bears. But let me ask you this question: would you rather someone give their honest opinion on what they think the market is, or just pat you on the back of the head and say everything's gonna be okay? Yeah, guys, we're going to 40,000 tomorrow, and then next week we're going to 69. That's not how it works, guys. So just please, for the love of God, stop attacking people who don't share your same viewpoints. All right, Rocco, we ready? All right. So we are bringing on a second time on the show, Mr. Pierce Ridyard, the CEO of Radix Works, Radix DLT. Again, they are also a sponsor of the channel. And so we're super excited to have him back. Pierce, how are you doing, buddy? Good to see you, man. Thank you so much for joining us.
I'm very good. Thank you very much for having me on the show again.
Of course, we're excited to have you. So unfortunately, Rob, our co-host, is out today, but we do have our really good friend Forrest joining us. He's pretty much a co-host of this channel. And so we're excited to have you. Forrest is huge into DeFi. And so what a better time to have him on the show with us. We're excited. A lot of things happening in the Radix ecosystem. We know Babylon is right around the corner, but I want to start here first, Pierce, because you're a very knowledgeable person. What are your thoughts on the FOMC? They did a rate pause. They said one more rate hike coming. Are you? Could you potentially run for a Fed chair in the future if they decide to fumble this?
I wouldn't want it, man. It's a poison chalice at this point. I think that we've had 40 years of everyone just slightly juicing the open market activities, and now there's like this just unbelievably unpayable down sort of like financial deficit. And when I say that, I mean, like, when you build a company, you get tech debt if you move too quickly. If you build a tech product, and you move too quickly, you get tech debt. In like economic terms, it feels like there's sort of like economic debt, like all of the things that have been happening in terms of stimulating growth over the last 40 years, all of the things that the baby boomers have enjoyed, and sort of the generation that came after that, in terms of incredible house price growth, incredible asset growth, incredible productivity, incredibly low unemployment. All of that is now coming home to roost as a result of what was done to actually make sure that happened in the first place. So I don't really have any particular view on what they are or are not doing. Right now, it feels more like rearranging chairs on the Titanic, deck chairs on the Titanic, than anything else.
Well, the Titanic did sink, and so I'm hoping we don't sink. But hey, you never know with these people. Like, Pierce, I just want to get right into it. So, we talk about on the show, one of my main focuses is, okay, we want crypto and DeFi to be more to be adopted by the mainstream. To me right now, It's not very user-friendly. The UX, UI is not where it needs to be, in my opinion. And I'm not a blockchain developer. That's out of my realm. But I'm sure you can speak on this. Why does the infrastructure need to be changed to improve the UX versus just making MetaMask better, right? Or making Trust Wallet better?
It's a really good question. Like the fundamental is that when Ethereum was being built, they didn't know what the main use cases of these public ledgers were going to look like. There was an inkling. I remember back in the start of Ethereum, people were talking about tokenization. They're like, you could be an artist, you could create your own token, but then they were also talking about all of the other things you could use with the internet computer. And so a lot of the decisions that were made were around like creating something that was very general purpose. Now we see that the main product market fit of these public ledgers is the creation of tokens, be that like fungible tokens like USDC, or non-fungible tokens like CryptoPunks or Bored Apes or whatever, and all of the sort of the magical things that are in between, and then the programmability and secondary marketplaces for that. And the way that Ethereum architected things meant that it's actually very, very hard for anything that's interacting with these smart contracts to understand what it's interacting with. And like, just to give a really simple example, the Ethereum doesn't really know what a token is. I know this is a weird concept, but when you create a token on Ethereum, you actually define the concept of a token every time you deploy a token. Then you define these interfaces, and so when you're interacting with something on Ethereum that says it's a token, it's only a token because it says it's a token. Like the smart contract defines it as a token. What that means is that if I send you a new token that your wallet didn't know existed because it hadn't been told that, there's a new smart contract for Piers Coin. And when I send you Piers Coin, you now need to know that Piers Coin exists as well. And because of that, what you get is all of these weird side effects where, and I'm sure you've done this plenty when you've had to like add a custom token. Yeah. Like if you're doing a new LPing, or someone said like created something new and you've degened into it, or like someone's playing around, like they send you a token, you're like, it's not in my wallet. Yep. And that's because you have to kind of tell the wallet where this is. There's a bunch of other stuff. People are really excited about EIP 4337, right? And like the idea of account abstraction. But actually, how it's been implemented in Ethereum is very. It's sort of a little bit like a Rube Goldberg machine, right? Where you have all of these complicated bits that create an end state. And the reason that there's a separate mempool and there's a separate set of validators and there's this whole like complicated way in which account abstraction interacts with just the Ethereum network itself is because they couldn't go in and change change how accounts were done. And Vitalik, has given plenty of talks about how long and difficult this path has been when they would have liked to have just changed how the fundamental system works so that you could have abstracted accounts. And then there's like a million other things that are true as well that we can go into depth, and I don't want to get too technical, but the infrastructure actually really matters when you're trying to create user experiences, because a developer, the less the infrastructure does the heavy lifting, the more the developer has to do the heavy lifting. And the more the developer has to do the heavy lifting of reusable components, the less, the higher the barrier is for people to be actually able to create anything good, and the longer it takes for new ideas to take root, because they don't have the fundamentals to easily build with. And that's why you need new infrastructure, because now we know what the purpose of public ledgers are, and you can have this sea change in how you can create an environment that makes it much easier for you to create great user experiences, but also you can have a sea change in how secure it is as well, which I think is really important too.
Yeah, I kind of want to piggyback off of that and talk about the big upgrade coming to Radix, which is the Babylon upgrade. And so, can you tell us a little bit about the Babylon upgrade? What is it going to fix? What is it going to enhance? What are you most excited about? I know you've probably been super busy and stressed out. We know how big of an ordeal these things are, upgrading your mainnet. So maybe speak on that a little bit.
Yeah. So the everything that we've been building for a very long time now is about to go live on the 27th of September. Prior to that, it was we already have a network live, but all you can do is staking and transactions. It was designed to test essentially our consensus algorithm and our Sybil protection mechanism and decentralize the holding of stake. But the thing, the genius, the thing that we spent all of this time on perfecting was the programming language and the Radix engine and the user experience, and how all those three things work together as a team to make it to do all of the things I was talking about in terms of creating a much better user experience and a much better developer experience. All of that stuff goes live on the 27th of September, and that feels incredibly. I'm incredibly proud by what the team has done to date, and incredibly proud with what the community has already been building. Like, we've had 1.5 years of having these programming language live in alpha and people like playing around with things, and the degree to which the ecosystem has matured and the people within our community have really started to run with these incredible tools. That's what I'm most excited about. Yes, we've done this really hard graft on building this incredible tech, but what is really starting to blossom now is that starting ecosystem. And on the 27th of September, we'll finally start to see what ideas people can run with, now that the barrier to entry for new people being able to create interesting stuff, what happens if you make it much easier to build dexes and secondary markets? What happens if you make it much easier to build social applications? What happens if you make it much easier to make token gated communities and be able to do much more coordination around things that are start off as games or start off as a bit of fun, because the stakes aren't as high to just trying out and building something new. And I think that all of these things coming together with this greater user experience, greater developer experience, and this sort of kernel of a fantastic community is what I've been building up to now, and what makes me so excited about the 27th.
Awesome. And you said the 27th, which is a week from today. And so
a week from today.
Go ahead.
I should actually preface that on the fact that the upgrade is happening now on network time. So it's going to be on or around the 27th, because it's the network precedes an epoch. So it could be the 28th, it could be the 29th. It just depends on how fast or slow the network goes between now and then.
Yeah. What are your thoughts, Pierce? I kind of want to ask you more of a general question. I don't know if we touched on this last time you were on the show, but the regulatory environment here in the U.S., crypto is under attack. DeFi is under attack. We had a tweet from the SEC saying they're not done going after protocols and exchanges. Do you think the U.S. Do you think it's too late for the U.S. to kind of plant their flag as you know that we've always been the financial technology hub of the world, but it seems like that is slipping away with what crypto and DeFi and CeFi is looking to do. Do you think it's too late for the U.S. and what are your thoughts on the landscape here, and what kind of net negative or positive impact could it have on the space as a whole?
Yeah, it's a really hard one. I don't have a simple or neat answer to this. Like, the US has got a number of really big advantages. It is a wealthy, incredibly powerful economy. It has one of the better demographics of any of the wealthy nations of the world, like in terms of it has more young people and more, and it has sort of like incredible centers like Silicon Valley of both talent and of capital. And so there's lots of things that are like really positive for the US. And I think the US culture of like just trying things, giving things a go, like celebrating success, celebrating entrepreneurship, and like celebrating risk taking, I think is actually really important for engendering like people trying things and like trying to make something that may fail, but that's okay. Like, that is really actually difficult. You can't downplay that fundamental culture and how important that is. But I think that everything in the US is becoming increasingly a political battle, and it's less about like, it often less feels about like the concepts of justice or the concepts of morality or the concepts of principles instead, or at least those concepts of justice, concepts of morality, or concepts of principles have now become politicized. They are now they now have this like way in which everything becomes a splitting along like party lines, and you can't have a conversation about whether or not something is a good or bad approach without something becoming political. And you've seen that in the judiciary, you've seen that in the SEC, you've seen that in sort of like Operation Choke Point, and so you have, and you're also seeing that happening in a micro scale in things in places like San Francisco, which is literally tearing itself apart. Like, it's one of the places that should have the most vibrant and successful economies and vibrant and successful communities, and that community is literally dying on its feet. So there's a lot to sort out here, and I don't know. It really could go any way from here. The problem is that I think that many of the approaches that the politicians are taking are out of fear. And when something represents risk, like DeFi does, especially when you're talking about the hegemony of the dollar, and especially when you're talking about a country where the dollar's hegemony and the ability for it to be a reserve currency is actually one of the few things that is keeping afloat US debt. There's a bunch of fear there, and there's a bunch of like really serious ramifications if that goes wrong. And so I can see like protectionism around that being a bit like that being sort of the underlying reason that the counter movement is happening in the US. But then you see other countries. There isn't really one other single country that has quite the same profile as the US that can succeed. Europe isn't one block. It isn't one country in the same way that the US is. And places like Hong Kong and Singapore and Switzerland, like, are all great jurisdictions, and they're all doing fantastic things, and they like have a really good center for the legal frameworks. They have a really good center for capital, but they don't have the talent there, and they don't, and so that bringing together of talent and capital like in one place at sufficient scale, like there's very few places that can beat the US for that. So all to play for.
Yeah. I just feel like, and you're 100% right. Every move has some weight politically to it, right? And, here in the US, I don't know how it is across the globe, but you're able to lobby. And by lobbying, you give people money. It's quid pro quo. I'll give you money to your campaign. Just make sure you have my interests at heart when you write these bills and legislation. And guess what? Guess what DeFi threatens? It threatens the banks. Like you mentioned, the hegemony of the dollar. And so it'll be interesting to see how that plays out if we get a change of leadership, which we know there's a presidential election going to be happening towards the end of next year. I want to give my co-host a chance here. Forrest, do you have a question for Pierce? I don't know if you do or not, but I kind of don't want to hog up all his time myself.
Yeah, I actually have a couple. So if I understand correctly with this Babylon upgrade, that means, the network's going are there decentralized applications or dApps going live? Like, is there any lending dApps or DEXs going live on that date, ready to go?
Yeah, exactly. So there's about 50 projects that we know in the community of like sort of various stages of completion and various stages of maturity that are like aiming to go live shortly after Babylon goes live. Obviously, when the network goes live, there's still going to be a little bit of things for people to do, and there's going to be the transition and all that kind of stuff. But shortly after the network goes live, we've been very fortunate in having quite a long time to sort of build up that community. There are multiple DEXs, there are multiple lending protocols, there are multiple stable coins, there are multiple sort of NFT marketplaces, there are multiple like really cool NFT projects. There's a bunch of metaverse projects. I've seen one or two like social things, and I've seen some really cool like tools that use some of the features that are basically you only get on Radix. One of the great things that you see on Radix is this concept of the transaction manifest, which is a programmable transaction layer that's completely human readable. So you can actually like just compose together many applications and then decide how tokens move between those applications, and then what happens at the end, and it all happens atomically. And people are like building front ends that on Ethereum, you'd have to build like a bunch of really complicated smart contracts to stitch all this together. And now you can just do it like as a front end dApp that people can sort of drag and drop how they want things to be brought together. So yeah, there's a bunch of stuff that I'm really excited about that I'm already seeing. And if you go on if you're interested to learn more, go on our blog, radixdlt.com/blog. radixdlt.com/blog. You'll see the like meet the team series, and there's like a bunch of the projects that are runs on Radix that you can go and like find out more about the team and what they're building. But I highly recommend checking it out. There's some really cool stuff being built.
And we actually have that website pulled up here, kind of what you're talking about. So Radix, and I'll drop this in the comments so you guys can take a look if you'd like to. And then Forrest, I know you said you might have had another question for Piers.
I do have one more question. This is kind of like a long-term, like higher level question. I did, just very preliminary research and saw 100% of transaction fees are burned, and the network is kind of secured by proof of stake, which is incentivized by that 300 million distribution per year until I think 2040. Curious to know, because people always talk about like the Bitcoin end game. What happens when Bitcoin, there's no more Bitcoin to be mined? What happens when all that the Radix is tokens are distributed? What is the incentive to maintain network security at that point? What's the tokenomics model look like if 100% of fees are burned? Which I'm a fan of, by the way. I think that's brilliant.
Yeah, so to be clear, it's 100% of fees on Olympia, which is the current network. When the
Gotcha.
next network goes live, when Babylon goes live, it's 50%. So 50% goes to the node runners, and then 50% gets burned. So there is income from validating transactions and earning fees to make sure that you're sort of making sure the network runs. It's a really good question, and the reason we did that was partly it was really to make sure that the question was asked at that point when the network got to that point. Like, I don't know what the world is going to look like for these public ledgers in 20 years time, and I think that it's sort of almost. I think that assuming that we know is actually probably the worst position to be in. So like what you often get within large systemic systems, which we have built Radix to be, we've built it to be a large systemically important fundamental piece of the global economy, right? And what you often get is you get inertia, or problem of inertia. It's very difficult to move people on a different path once that path has been set. So let's say we go from now to 20 years time, and this is a systemically important piece of global infrastructure. The reason that's been set up is because I want it to be a discussion point. I want it to be a point in time which people actually have to talk about it and go, Now we understand, like, I don't think we really understand what real stakeholder management on top of public ledgers look like. We really understand when these things are systemic and part of like core business functionality of like real parts of the economy, like, or potentially like the majority of an economy, maybe the way in which, you know, nations run their GDP. Like, at that point, there is this question of like, what is the concept of a public good? What is the concept of incentivization within that? And the reason for going, right, we'll have a fixed emission is that you can change anything on a public ledger, right? You could fork Bitcoin and you can change the emission schedule to whatever they want. But now they're having the conversation about it, and I think it's really important. Yes, it's controversial, but it's also really important. Now with Radix, that's essentially the same thing that I've gone like fixed emission makes sense to people. It's easier to understand, but also it will make sure that there's a question, because it could be that fees are sufficient and generative enough, or that there are sufficient other organizations that have a vested interest in the continuation of the platform without there needing to be an incentive next to it, because they rely so much of their business relies on it, that the security, that making sure the network is secure has its own, there's a own set of external incentives to do so. I don't know, but this is the question. I want there to be the conversation.
And what a great question that was. You know,
makes sense. Yeah, that's great.
There's a lot of talk. There's been a lot of talk on social media about what happens when all the Bitcoin's mined. The miners, they're not going to mine Bitcoin because they're not making money. So I think that was a great question. Pierce, we've taken more of your time than we said we were, like we did last time. We just can't help ourselves, man. We love having you on. You're such a smart, knowledgeable guy. The more people we have of you in our space, we have a bright future. So we appreciate you. We appreciate what Radix is doing. We're excited for the upgrade of Babylon next Wednesday. And Pierce, thank you so much for your time. And we definitely look forward to bringing you on again. Enjoy the rest of your day, my friend, and we'll talk to you next time.
Thank you so much. It's been wonderful being on again.
Thank you, Pierce. That was a good question for us. That was a very good question. You know, Thanks. A lot, you know, one of the first questions I asked Pierce when he came on the first time was, hey, why build your own layer one where you can just build on top of an already established layer one? And so I think when you see, you know, I'm reading Elon Musk's biography right now, and the guy was essentially pushed out of two major companies that he started and created, where he could have stayed on, taken a step back, done what they wanted him to do, the executive board at the time, and continue to rake in the money. But he chose to do it the hard way. He chose to go and start another company. And now he started 3 companies that are worth over $1 billion. So those are the kind of pioneers. Those are the vision that we need in our space to be able to not just take the shortcut, the easy route to launch tokens and make money and leave. It's to build something better than what you see is on the marketplace today. That is how we're going to move the space forward. And so that is what I'm excited about. Another thing I'm excited about is our new segment. So today's portfolio was sent by an anonymous member of our community. I'm just going to go ahead and pull up the tweet. We had a lot of good feedback on this on our Twitter. We'll be rating this community member submitted portfolio on tomorrow's live show. What would you rate it 1 through 10? And so I'm going to go over this. And Forrest, I'm going to ask you your brutally honest take. What are your thoughts? What would you move around? What do you like? What do you dislike? And then give a rating of the portfolio. So I do want to note this is a portfolio that is worth $250,000 right now. I can tell you how many tokens, but the portfolio in its entirety is $250,000, and 47% of that is in Ether. Coming in at number 2, we have 9.1% in Bitcoin, 9% in Aave, 8.4% in Gala, 6.2% in Polygon, 5.4% in AVAX, 5% in Decentraland, and there's 7 other tokens that come in right under 10%, and those other tokens include Metis DAO, Render, Algorand, Hedera, AMP, and SEI token, SEI. So Forrest, what are your thoughts on this portfolio? And I'll kind of leave it general, but please, all I ask is be brutally honest. If you hate it, say you hate it.
Yeah, so I think it depends on who's like what the goals of the portfolio are. So you know, this is such a complex discussion because like what's a good portfolio or suitable for me is going to be very different than somebody else. So that being said, if we're just looking at the individual assets, yeah, I do like the fact that it's dominated by Ethereum, and I do, there's some Bitcoin in there as well. That's more of a ratio that that 9.1%, pretty much 5 times as much Ethereum as there is Bitcoin. That's kind of in line with my thoughts on the Bitcoin versus Ethereum discussion. I will say in the short term, Bitcoin does have probably more upside here in the next 3 to 6 months because of this Bitcoin ETF decision. That being said, once you get a Bitcoin ETF through, guys, they're pushing for an Ethereum ETF right after that. They're already applying, right? So Ethereum, is potentially a catch-up trade. I like Ethereum's supply side tokenomics a little bit better. So I like the Bitcoin Ethereum ratio. Now, the rest of the portfolio, I do think is spread a little bit thin. I think at a time like this, this also depends on what the acquisition prices of these assets were. Because say that Decentraland was picked up last bull market, right? And it was round tripped, and you got a or last bear market rather, and you got a really good entry price on it. Not a big deal. Same thing with some of these other ones. Or if you bought at really low prices in this bear market, say you picked up that Matic under 40 cents or so, it really depends. I do think that most of these assets are going to have a high degree of correlation. So you're just kind of, when you're spreading yourself across 4, 5, 6, 7, 8 different altcoins, you're taking more risk to get the same to get a really similar outcome in terms of directionality of the price action. I do think that this portfolio is missing Solana, but I'd say I understand why people are cautious to get it into Solana. I think that some of these altcoin positions could be consolidated. I don't know. I don't know that there's a need to be in 15 different things or 12 different things at this moment in time. But it also depends on how long you're willing to hold. Personally, if I had to pick a least favorite, I'd probably say Decentraland. I think that and I could be wrong on this, but I do think that the metaverse is, if you look at their actual user base, the actual number of players on Decentraland, I think it's overrated, and I think it was a hype phase. I can get behind Gala. I can get behind like the blockchain gaming narrative, not because I'm incredibly bullish on it, but because I do think that it will see a period of. I think it'll see a bubble. I do think it'll see a bubble. I think it'll be exactly that though. I think it'll be very similar to the metaverse bubble where there's not a ton of substance there in terms of Decentraland and Sandbox and a large user base. But I do think it'll see really strong speculation if you hold it for long enough. I think at the end of the day, we get a year or two down the road. I'd be shocked if we haven't seen a blockchain gaming push. Matic, AVAX, they're fine. If I have to pick a layer 1, or I know Matic's technically a layer 2, but if I had to pick a layer 1 right now, it's definitely going to be Solana. And Aave I think is fine too. A little DeFi exposure, but I think it's going to be pretty correlated with ETH. I think you could roll up Aave into ETH. I think you could roll up AVAX and Matic into Solana. But again, that's a personal preference. I think you could roll up Mana into anything else. But those are just personal preferences. I mean, if you're looking at holding some of this stuff for a long period of time, and you're okay with waiting, and you're going to you're diligent about taking profits in the next bull market, I think all of this stuff is correlated. It's all going to run at some point, and it's a matter of how you manage your exits more so than how you rebalance the portfolio right now. I think the important thing is going to be if Decentraland runs, taking profits on it. If AVAX runs, taking profits on it. I think that's going to be the important thing.
What number would you give it, 1 through 10?
For me, if this was my portfolio, I would be immediately rebalancing, and I'd say a 4. But for your average investor with a long-term time frame, I think it's 7.5. I think it's fine. I think 7. There's nothing in here that's just like alarmingly like. The only thing I don't like here is Decentraland. Everything else I could see bouncing back in a bull market. So I'd say, probably 7.5. There's nothing here that's just like, what is that doing in there? That has no business being in anyone's portfolio. It's solid. It's solid.
Okay.
It doesn't meet my current expectations on the market, which very well could be wrong.
For me, this is way too Ethereum heavy. I mean, when you talk about so this portfolio right now is worth $250,000. So obviously that is a big chunk of change for anyone. Okay. So when you have you have close to 50% of your network in the Ether token, on top of that, you're leveraged against ETH's layer 1. You have Gala, you have Aave, you have Polygon, or not Polygon, Decentraland. Metis DAO is a big one in there. And so for me, it's just way too ETH heavy. If you're messing with a $250,000 portfolio in a bear market, which could potentially turn into a $3, $4, $5 million portfolio, I think Bitcoin, I'm the opposite of you, Forrest. I think Bitcoin and ETH should be swapped. I think Bitcoin should be closer to 50% of your portfolio. There is so much narrative coming to Bitcoin and so much liquidity going to be flowing into Bitcoin. And Bitcoin has a set schedule having, and I understand, you talk about it all the time, Forrest, is the sell pressure from the miners. But these block rewards get halved. And so like we had Mark on the show yesterday, anytime there's a halving, it just typically adds a zero. You look at an asset like Bitcoin, that they're not launching ETFs for Algorand and Hedera. They're not launching spot ETFs. The only two are going to be Bitcoin and ETH, and Bitcoin obviously is the number one. It is the king of cryptocurrencies. So for me, when you're messing with a $250,000 portfolio, I know you got money, because people don't know I'm not going to put a $250,000 in crypto. I know you care because you've diversified, right? There's no meme coins in here, right? I'm looking at the list on the others. There's no meme coins. These are all solid projects. I'm okay with Mana being at 5% because I agree with you. Metaverse last cycle was a hype. Who's to say it's not going to be another hype going into the next cycle with Google Cloud, with AI, with what Meta's doing, with the new Apple headset? Is it going to be integrated with AR and not just VR? So that I'm okay with. Gala, I think, is great. I would diversify out of the Ethereum ecosystem. I 100% agree with you. I definitely think there should be some Solana in there. There should be some Cardano in there. There should be some other layer 1 proof of work. I know Caspa is a big hit with our community. You have Caspa, you have Cadena. I want to see some privacy tokens in there. So for me, a $250,000 portfolio, I would have it a little more diversified and not as ETH heavy. And so those are some of the things I would change as far as what I would rate this portfolio. I would probably rate it a 4. But what I would tell this person is up your Bitcoin, move a little bit of that money out. You don't even have to put more money in. Bring ETH down to about 20%. Move some of that money in, move a majority of that money into Bitcoin. Add layer 1s like Solana, potentially Cardano. Throw a payment coin in there. I know you got AMP in there, but AMP to me is I'd throw a privacy thing in there, Monero, Zcash, whatever the case may be. And maybe take a flyer on something that hasn't been done before. Maybe a narrative that you believe is going to push the space forward. I would love to see some quant in there, kind of software as a service, a layer 0, something with interoperability, whether it be Cosmos or Polkadot. And so I think when you're dealing with this kind of money, I think you need to be a little more diversified. Of course, this is just my personal opinion. But let us know what you guys think in the chat. Let us know, what number would you give this portfolio? Forrest is at a 4, potentially 7. I'm at a hard 4. So double deuces if you're playing craps on the table. And guys, this is a segment we're going to be doing every single week. We are going to give you instructions on how to submit your portfolio if you want us to rate it live on the show. And so this is something, what do you guys think? Did you guys enjoy this segment? Do you like the insight? And the idea of this, guys, is to keep you guys engaged, to give our opinions. Also, you might have some tokens in your portfolio that we pick one week that we've never heard of the token. Guess what? We're going to have to now go and do the research and understand what the thing is. So we're learning, you're learning. I know a lot of people are always asked, what do you think about this coin? What do you think about that coin? You get to hear it live on air from people who are experts, who understand tokens and everything. So I think it's a win-win for the entire community. So it's something we're really excited about announcing. And I do want to share one piece of news, and I kind of We didn't have a lot of time before the show, me and Forrest talk about this, but I briefly mentioned it. And I was like, hey, man, just off the top, this sounds like an extremely big deal. Payment app Venmo to offer PayPal USD stablecoin. Now, we decided, hey, well, Venmo, 78 million people use Venmo, and they processed $250 billion in volume last year. Trillion with a T. So $244 billion of money has flowed in and out of Venmo. Just to give you some context on this news, the peer-to-peer payment platform Venmo will soon offer the stablecoin PayPal USD or Pi USD. Users will be able to buy and send Pi USD to others on PayPal, Venmo, or compatible external wallets. This is a quote from PayPal. In the first example of a stablecoin enabling wallet interoperability at scale with no cost, transfers between PayPal and Venmo users are fast and free, connecting two wallets with millions of users each. Forrest, I'm pretty bullish on this. What are your thoughts on Venmo, PayPal, and hey, man, is the PayPal stablecoin gonna be like the new standard? Is it the Trojan horse to get people who are maybe apprehensive about moving from Web 2 to Web 3 to join our space and interact with the blockchain?
Yeah, so Venmo, I looked it up. Venmo's actually owned by PayPal, so this move obviously makes a lot of sense for PayPal to just integrate this into their existing companies. Yeah, so ultimately, if you have a Venmo balance, right? My understanding, the way that they're making money off of that is that they just able to reapothecate a portion of that into safe yield alternatives, no different than what you see with like USDC or USDT, back it with treasury bonds or whatever. But the question that I have in terms of deciding on whether or not this will be bullish or not is, are these Venmo balances, like, will they have an option to buy Bitcoin within the Venmo app? Will they have an option to trade your PayPal US dollar stable coins directly for Ethereum or Bitcoin? If they have that direct on ramp into the crypto ecosystem, and I do think that would be smart, because I do think there will be demand for it, right? And they can make money off of transaction fees doing that. And we've seen that integration of Bitcoin into PayPal already. Then yeah, I would say it's bullish, right? What happens when Bitcoin's ripping? It's ripping to a new all-time high, and you go into your Venmo app and you're like, oh, I've got $500 in PayPal US dollar, stable coin. Let's throw half of that into Bitcoin right now. That's what a lot of retail, hobbyist investors are going to be doing, just to get a little Bitcoin exposure and ride the wave. So I do think this could be net bullish.
Awesome. Forrest, you announced that you are introducing, or you're going live with 3 new indicators on TradingView. I believe today is the day. Tell us a little bit about that, man.
Yeah, happy to just share them real quick. It's pretty basic. It's nothing too crazy, but some quality of life updates for a few different ways of calculating margin pressure levels and whatnot. So a couple things. We're looking at Bitcoin. So the first indicator is the margin pressure level cloud. You want to use this on kind of the higher time frame indicators, and this is just a moving cloud of the margin pressure levels, so you don't have to drag and drop them and put them in. And you can see this is where we held resistance. Bitcoin came back down to find some support, right? This is starting to tick up a little bit. Maybe we rotate back up to the range, but it's just a quick way to find some strong support and resistance levels. You see we ran into this green level over here. They are kind of a little bit of a lag, not, I wouldn't say a lagging indicator, but they're lagging in terms of how they generate, but they are a leading indicator in leading, where your support and resistance is. So, you get some strong confluences here where you get some overlapping ones. This is just a quick way to, plot margin pressure levels on the fly. It's a lot easier for the average person than trying to pick where your local highs and local lows are. And you can just, adjust this to multiple time frames to find, different and stronger levels. Obviously, here was a big one on the weekly. That was ultimately what capped the top of our Bitcoin local high for this bear market. There's bear market rally, so to speak. So that's one of them. The second is really interesting. So I've got to throw it on here. Invite only scripts. I go to not time frame performance, day of week performance. So if we go down to day of week performance and we throw this on a new separate pane, this is probably my favorite one because it does show the trend. Move to new pane below. And then we are going to zoom to, let's call it the daily, since we're looking at the day of the week. This is going to break down the trend in performance by the day of the week. So you see on the bottom here, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, we're going to see, what day of the week is Bitcoin performing the best and what has the trend been recently. So, if I isolate here for I can take off all of, the other days and just isolate for Mondays and Tuesdays. What we see is a really strong trend in Tuesday's pumping for Bitcoin. Tuesday performance for Bitcoin is in an uptrend, and Monday performance is been in a downtrend. Right. So what does that lead me to believe? Well, we're probably going to see some poor days on Mondays and some pumps on Tuesdays. Well, that's a really nice subsequent level, right? That's a really nice, strategy. If we're trying to, make a DCA bid or we are trying to buy on an inexpensive day, or we're trying to look for longs on a specific day. And that's exactly what we saw here, right? This past week last week, we saw the bottom come in on a Monday. Right, Monday was a poor performing day, and Tuesday was a pump day. Right, and right now we're on a Tuesday, or sorry, yesterday was a Tuesday, and we saw another pump yesterday. We're on a Wednesday right now, a little bit of a pullback. And then finally, the last indicator is actually going to be somewhat similar to that. But it's going to allow you to grab any portion of data for any asset. I'll take Bitcoin here, and it's going to allow you to take this range. So we're isolating for, let's just say we want to see the performance of Bitcoin here, and if I can grab it, whoops. I've got.
And Forrest, are these going to be paid indicators or free?
Yep. These are part of the Sistine Research paid indicators plan. So, we were up to like 8 indicators now. So if you already have the other indicators, you should have gotten these already or received an email. But yeah, so essentially all we've done here is we've grabbed this, since the bear market low to right now. What has been the performance by day of week? Well, we see Tuesdays up here, 1.5% on average, right? And we can see our performance, and we can also go out to the monthly and grab a wider time frame. And this is going to be really, really relevant coming up. And I'll tell you exactly why this is going to be relevant, because if we grab from our bear market low of back in 2015, and we take to where we're at right now, the average performance we've been talking about this, September's a down month for Bitcoin. October, November, December is the sweet spot. 21%, 22% average returns in the month of October for Bitcoin. If we get a Bitcoin ETF, I think we'll see exactly this. 22% for October, 6% for November, 12% for December. Bitcoin loves to rally in Q4, just like the S&P 500.
So if you're on the daily time frame and you put that up, it'll tell you what days of the week, how it performs. And then if you go monthly or weekly, that's pretty cool. You say it very nonchalantly about it being simple, but I think like our space is already complicated, and we can make it as simple as possible for people. I think that's going to be. I would rather go with that than something that I got to study on and practice and learn and ask 500 different questions. Then how do I do this? I'd rather be able to use something. That's why I love the easy band so much, and the whole thing of DCA in and DCA out when it's on the red and the green bands. It's simple. Oh, it's in the green. Let me DCA in. Oh, it's in the red. Let me start to DCA out. And so I'm all about simplicity. The less people have to think and the more information they have, I think it serves them the best. With that being said, guys, I do want to give a couple more shout outs to channel sponsors, Cam's Blue Wire Technology. If you want more information on how they can help your business grow, visit bluewiretech.com. Also, big thank you to Radix for sponsoring this channel as well. The top layer 1 DeFi, and of course, big thank you to Pierce, CEO of Radix, for joining us today. Also want to give a big thank you to my man Forrest. Always there when we need him. Forrest, we appreciate you, man. We know you're super busy. You got a lot of things going on. Your research paper, obviously you have a family, you have a wife. And so we just want to thank you for always blessing us with your knowledge and your time. Anything you want to leave our community with before I tornado us out of here?
No, thanks for having me on. As usual, I mean, look, I sound like a broken record, but I think everyone needs to just be paying attention to this Bitcoin ETF decision. That's what I think the Q4 for crypto and really for the market, the crypto market overall, really boils down to. Just pay attention to this ETF decision and probably play it accordingly. I think that's where we're at in this market. But otherwise, I hope everyone has a blessed day and a great rest of the week.
Amen to that. Guys, go check out all of our social medias. If you want to support the channel, you know how to do so. Also visit our merch store at inandoutcrypto.com. We also have a new website, sincitycrypto.io. Visit that as well. And with that being said, Rocco. Guys, thank you so much for tuning in. It was an absolute pleasure. Make sure to come back tomorrow. Same place, same time. On behalf of all of us here at Sin City Crypto, love you guys. Till tomorrow.
Sin City Crypto. Everybody know what we here for. Entertainment and info. Gonna show you how to get that big dough. So every day stay tapped in. For big facts, no capping. With Bitcoin, if you're in, then you win. We divide the pie with no fraction. It's Big Rob, David. I split the game, but they gave it. Named according to your favorite. I got dry powder, why save it? To the OGs, new beginners. Special shout out to the well members. Buy the dip, sell winners. Ain't really nothing you can tell sinners. Tune in for the latest new flavors. They gonna teach us mean coins. They polarizing like barbecue chicken pizzas. I laugh with a major grin. Laggers, we trade them in. Baddies, they came to sin. And sinners gon' play to win. Screaming, hola, till my bags are flowing over. Hold ya to the moon and to the solar. Won't I? Don't be letting FOMO control ya. It's over when the finger tornado close ya.